Have you ever wondered how a company gets listed on the Indian stock market? Well, let's delve into the fascinating world of stock market listings. The process of being listed on a stock market, or going public, is a significant milestone for any company. It's like a rite of passage that signifies a company's growth and its readiness to open its doors to a wider investor base. Now, what does it mean to go public? Simply put, it means that a company is transitioning from being privately held with a limited number of shareholders to being publicly traded, where anyone can buy a piece of the company in the form of shares. This transition allows companies to raise capital that can be used for expansion, research, or even paying off debts. But enough of this preamble. You're probably wondering, so how does a company in India go about this exciting process? Stay tuned as we unravel the steps. Before a company can even dream of getting listed, it needs to meet certain eligibility criteria. These are set by the Securities and Exchange Board of India, or SEBI for short. First, a company needs to have net tangible assets of at least 3 crore rupees in 3 out of the preceding 5 years. Secondly, the company should have a track record of distributable profits in at least 3 out of the immediately preceding 5 years. Moreover, the company should have a minimum average pre-tax operating profit of 15 crore rupees, calculated on a restated and consolidated basis during the last 3 years. Additionally, the company needs to have a minimum of 1,000 prospective allottees in its issue. Lastly, the company's size of the public issue should be at least 25% of the post-issue paid-up capital. Once these criteria are met, the company can move on to the next step, preparing the draft red herring prospectus. The draft red herring prospectus, or DRHP, is a crucial document that gives potential investors a sneak peek into a company's operations. This isn't just a mere document, it's the company's story, woven with facts and figures. It's about the company's business, what it does, who runs the show, and the financial health of the organization. But it doesn't stop there. It also lays bare the potential risks that the company faces. Now, who helps the company prepare this all-telling document? Enter the investment bank. With their deep knowledge of finance and the market, the investment bank works closely with the company in crafting this prospectus. They ensure that all the necessary details are accurately presented and nothing is left to ambiguity. Once the DRHP is prepared, it's not time to relax just yet. This document now has a date with the Securities and Exchange Board of India, or SEBI. With the DRHP ready, the company can now submit it to SEBI for scrutiny. Once the DRHP is submitted, the company must wait for the green light from SEBI. Now, what is this green light we're talking about? It's the scrutiny process conducted by the Securities and Exchange Board of India, or SEBI. This regulatory body meticulously examines the DRHP to ensure that all information is accurate and complies with the necessary regulations. This process can lead to 3 possible outcomes: approval, rejection, or a call for further clarification. If SEBI approves the DRHP, the company can move on to the next step. If it's rejected, the company will need to rectify the issues identified and reapply. If SEBI calls for further clarification, the company must provide the requested information. Upon receiving SEBI's approval, the company launches its initial public offering, or IPO. This is when the company's shares are sold to the public for the first time. And voila! With the successful completion of the IPO, the company is now listed on the Indian stock market. So there you have it, the journey of a company from private to public through listing on the Indian stock market. We've covered the essential steps to demystify the process, beginning with fulfilling the eligibility criteria. This includes the company's financial health, its operating history, and its commitment to good corporate governance. Next, we discuss the preparation of the draft red herring prospectus, a document that lays bare the company's operations, financials, and future plans. It's a comprehensive report that potential investors use to make informed decisions. And finally, we delved into the scrutiny by the Securities and Exchange Board of India, or SEBI, and the subsequent launch of the initial public offering, the IPO. It's a momentous occasion when the company opens its shares to the public, marking its transition from a private entity to a publicly traded one. Thanks for joining us on this insightful journey. Remember, Every public company started somewhere, and now you know how they made it to the big league. Stay curious and keep exploring.